Alright everyone, here we are with ticker symbol EH, and before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow, and to all my subscribers, welcome back. And before we go ahead and jump into what this chart is showing us, I want to say thank you to the investor and subscriber and viewer to take the time and request this one. Not only is this going to help you, but it may help other investors as well that may have overlooked it or weren't even aware of this one. I suggest that everybody does their due diligence and research to further expand on knowledge on this ticker symbol and this chart as we jump into it and explain it, and I hope it helps you and many more. So thank you for requesting it, and let's go ahead and see what this chart has to say. So IPO was at the end of last year, beginning of this year, and IPO rode all the way up to about $13.65. From $13.65, it dropped all the way down to about $8. It ran up. There was a lot of volatility, and towards the middle of the year, it hit lows here of about $7.75, $7.76, give or take. So I want every single investor to be aware of the lowest point. It's very important, because if that ever gets broken through, according to the volatility of which direction this goes, this could hit newer lows. And I want us to look at the highest point reached, which was earlier in the year, back in around May or April, and that was $15. We can see that here. It was around April 28th, and it reached $15. Now, we're currently at 1043, and the question is, could the bulls continue this momentum? They've had a slight recovery here, and we're going to look at this closely based off of the last couple of hours of the day on Friday, what to expect on Monday, and I want us to also look at some important numbers here. So we're going to look at this based off the highest point before it slightly dipped and leveled off, and then we're going to look at some lower points and also the highest point reached recently, because this is the highest point that this stock has reached in the last couple of months since July. So here we are with our highest point, and that is right here at 1245. 1245 is super important for the bulls to hit newer highs, new resistance levels, and move further into new resistance levels deeper into bullish territory and moving further away from the 50-day moving average in an upward direction. So keep that number in mind. But right now, that is not the resistance level we want to pay close attention to for Monday. That is the one you want to pay close attention to for the coming days and weeks. Now, on the other hand, if support is broken through and the 50-day moving average is broken through, your next support level would be down here at $9.10. If that gets broken through, this is getting deeper into bearish territory. But like I said earlier about the resistance up here, same thing with the support. That is something to just pay close attention to for the next coming days and weeks. So let's see what our resistance levels and support levels are for the beginning of this week and for Monday. So here we are with our first resistance level to pay close attention to, and the bulls need to break through this. I want to emphasize that to continue the momentum and stay above the 50-day moving average. The reason why I say that, and I usually illustrate this, and my drawing is not the best, is because if the stock goes up and hangs out and doesn't pass that resistance level, this 50-day moving average at some point will catch up to the price and break through it to the point that now the 50-day moving average is above and the price is below, and we are now in bearish territory, giving that opportunity for the bears to gain leverage and gain control over the chart. Excuse my terrible drawing, but I do want you guys to visualize it to see why it is very important for the bulls to break through this resistance, continue the momentum, and move further away from the 50-day moving average. So they need to break through 1111, turn that into a support, break away from it, reach newer highs and newer resistance levels. On the other hand, we have our support level here. And this support level, if it gets broken through, there's a small window between support and the 50-day moving average to pay close attention to. And what is our 50-day moving average? Well, the 50-day moving average is 954. If 954 gets broken through, we are now in bearish territory. And the bears are going to start gaining leverage and do everything they can to pull it further away in a downward direction. Now, before getting there, the support level is very important because we have a window between support and the 50-day moving average, which we're still in bullish territory for the bulls to reappear and bring this back up, or see if the bears are dominating. So right now our support is 10.01, and if 10.01 gets broken through, I want to emphasize to all investors, pay close attention to the behavior of the stock. How quickly is it going to newer lows, or are the bulls trying to reappear and bring this back up? As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, It was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28 and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.